Happy Friday to all my lovely, lovely realtors and referral partners. I don't know how your year is going so far, but the weirdness that's happening already in our world, I'm just now calling this Q5 instead of Q1. So I'm hoping we go into a better Q1 here pretty soon. But I wanted to bring up something that actually came up with a buyer this past week, and that is the VA funding fee. Most of my VA buyers are very confused about the funding fee. Most of them have not even heard of the funding fee, or they don't even understand really what it is. So in case it comes up for your buyers, I do want to educate you guys of what is the funding fee, who pays it, who doesn't pay it. So the funding fee is a VA loan characteristic. Most VA buyers will pay a funding fee. It's financed into their loan though, so they're not paying it outright, but it will be a portion that they're paying month after month after month as part of their loan. So for example, if you have someone who their contract price is $350,000, they're putting $0 down for their VA loan, their actual loan amount may be $307,000 or more, depending on their funding fee. The funding fee increases each time they've used that VA loan technically. So there's a first time funding fee and that what they call the second time use funding fee, which could be second, third, fourth, fifth, 100th home. But there's a first funding fee, and then there's a higher second time funding fee. And then there's a different funding fee if they're refinancing. So if they're refinancing and it's not what they call an EARL, which is the fastest refinance, they will go into the second time funding fee. If they're refinancing and they're doing the, what some people call like the fast VA refi or the quick VA refi or an EARL, so we call it in our world, it's actually a lower funding fee. So another benefit of why we try to do that type of refinance. So there's 3 different types of funding fees technically. And I tell everyone, if you're VA and you've owned a home before and you're going to do VA again, that funding fee is going to be higher than it was last time. There are individuals that can be exempt from the funding fee, and this is where it came up this last week with a buyer where another lender told them they were exempt, and I knew they weren't, and they weren't. So let's talk about who's actually exempt. So we pull a buyer's certificate of eligibility. That tells us 1, that they're eligible to use a VA loan, 2, how much eligibility they have. Let's say they've got some eligibility that's tied up in another property and we may not know that. If it's not on their credit report, for example. It tells us if that eligibility is being tied up, and sometimes maybe they've sold a property and that eligibility wasn't renewed, and so we need to go through the process of renewing it. But it also tells us about their funding fee, whether they exempt or non-exempt. The only individuals that will 99% of the time be exempt are those who are disabled. Either technically they can be semi-active duty and disabled, it's very, very rare, or what we typically see, they're discharged from service and disabled. If they are receiving VA disability or VA retirement and disability, they are typically exempt. Now there is a caveat to that. If they are considered a very, very low percentage of disability from the VA, they may not become exempt. But most VA individuals receiving disability, as long as their disability met a certain threshold, they will be considered exempt. The second way that they can be exempt is if they are active duty and have received a Purple Heart. They will automatically be exempt from the funding fee. And the third way is for surviving spouses. So if someone has a spouse that passed away that had a VA benefit, they can use that spouse's VA benefit. And if that spouse was exempt because they passed away for a disability reason or they passed away for an active duty accident, for example, then that spouse will also get to use the exempt status of that spouse who passed away, which is unfortunate, but it does happen. So those are the only people that are exempt. If your borrower's COE does not say that they are not exempt, then they are not exempt. And that's what happened this last time, where a lender, we had a buyer who was going through the process of VA disability, but it was not completed yet. So they are not exempt from the funding fee. They had to pay the funding fee as part of their loan, and another lender told them they didn't because they were applying for disability. Then they found out about halfway through that process they did in fact have a funding fee, as they told them that they would. So if a borrower is going through the disability process but it has not been finalized, the VA has not processed all of the disability piece to make them exempt, they are not exempt from the funding fee. However, VA borrowers who were not exempt at closing and become exempt in the future, like this individual will, and their disability is finalized, they can reach out to the VA and they will actually get that funding fee refunded back to them. And they'll probably go buy some massive big screen TV instead of putting it back into their mortgage, but tomato, tomato. But that's the basics of the VA funding fee. So if you hear your borrowers talking about, and they should be asking us, but we know they go to you guys too, of, I don't understand, what's this extra portion of my loan? Am I paying this myself? Why do I have this? More than likely it's their VA funding fee, because they do get confused when the loan amount looks higher than their purchase price if they're putting 0% down. I always explain it to my borrowers multiple times, but I know not every lender does. So you may be getting questions if they're coming from an online lender or outside lender. So it is good just to know, no, they're not paying it at closing. It's financed into the loan. They could pay it at closing, but no one would want to do that, truth be told. We're lucky if our VA borrowers have any money in their bank account sometimes. So they're not paying that outright at closing. It's financed 99% of the time. But they will typically have a funding fee. Most of them know if they're exempt, because again, they're on disability. They know that they should be exempt. But I tell all of them, it comes down to your COE. Like, it's not a you verbally tell me you're exempt. It's on the COE. If it's not on the COE, then it's not exempt. And if it's an error, we can definitely go to the VA and say, like, hey, this person's received their paperwork that they're disabled. Their paperwork shows they should be exempt. Their COE is not reflecting that. What can we do to fix it? But that's very rare. The VA is actually pretty good about their paperwork, surprisingly. But that's the ins and outs of the VA funding fee. If you have any questions about your specific borrowers, or your borrowers have questions, or they want to double check their VA loan to make sure they're getting what they think they're getting, I'm always happy to take a look. Have a great weekend.